Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linn & Associates with your metals market update for this Monday, and this is the 27th of February, 2017, about 2:25 p.m. Central Standard Time. Okay, metal markets are all selling off late in the trading session. Your dilemma is that you're going to close higher in the gold at 1258.30, not here. So if these were the last quotes, the market will put a settlement price, 1258.30, and wherever the last quote of the day is, it'll probably, the word is probably, open down to that number. I say down because it's lower on the day right after 5 o'clock. What we have to keep an eye on is how does that impact the charts. Now, one of the things that went on today to impact the gold market was President Trump was talking about tomorrow delivering his speech to the joint session of Congress, talking his budget. He's talking defense spending, infrastructure spending, taxes, and Obamacare. And he made a statement that before he can do his tax cuts, he's got to get Obamacare fixed, whatever that means. Is he dismantling it, putting new parts? Nobody seems to know, but we'll have an idea. He said we're going to know things tomorrow night. So on that, the gold went up, and now as the market's rethinking it, the gold is starting to settle off. That's the way to look at it. And by the way, this was the weekly chart, and you can see that until you take out 1217.30, you're in an uptrend via a pattern of higher lows where the arrows are, higher highs. You have a skid mark on the chart. I should talk about that. The 18-day average of closes in red and the 100-day, if you go back to last week, you had the 18 over the 100. See, 1202.60 is higher than 1202.50. Now it's under it. That's called a bearish crossover, but it gets negated in this case. Why? Because prices are trading over both those moving averages. And if that, in fact, is the case and it stays like that, what gets to be very interesting in the sense that that keeps the market, if you will, neutral in terms of averages, but because the price is over both, the trend is still up. In other words, the crossover is meaningless to me. In looking at the April gold daily chart area of closes, well, I've got the close in where you're going to be, and you can see how you've come straight on up from there, but you can also see you're almost $5 lower than where the settlement's going to be. You can see how it's looking on the chart here, but this is a false look. How do I know that? I already know the settlement price. Even if this line went all the way down here, the settlement's going to be, nothing's going to stop it today at that 1258.80. In the April gold, you still have a pattern of higher lows, higher highs. Okay. When I look further at the chart, on the daily basis, the 18-day average had a bullish crossover, and here's why this one's real. The 18 got over the 100, and prices were trading over both. That's what made it real, and it has certainly worked. You've gone on to new highs for this move, so it's met its target. What about speaking targets? I want you to look at the upper Bollinger Band. The odds of staying over the black line or under it, just 5% of the time. So I always look to see where that's at, and I look to see what my momentum indicators look like. And to get up there, on the first challenge, coming up here, you weren't embedded. So from there, the market's reacting late in the day, and I know it's going to settle higher, but it's trying to break back under it, which makes all the sense. More important to me tomorrow, we'll be giving the market a chance tonight to start trading and then see if the embedded reading, and yes, it's now embedded. You have all the criteria for that. If the red line can stay over 80 on that lower open, that it's looking like it's going to happen. When you get to the gold ETF, you've got your embedded reading. Notice where the market is faltering. You know what I'd be saying. I'm telling you that I think pros are taking money off the table, and because it's embedded, I think they'd be willing buyers on the break till that is lost. I mentioned that the gold miners are the weak sister of this whole thing, and boy are they. Take a look at this. New lows for this move. If you take a look at that, you got to go all the way at the beginning of the year January, in order to catch these prices. Now, it did get underneath the lower Bollinger Band, and it's still there by about 25 cents, so we'll see what it does, but only 5% of the time do you stay under it. Could it burst lower? Yeah. Now, let's assume it does. The 100-day average is waiting for the market at 22.76. There is no way this is a buy market, none. There is no way to instantly make it one because the pattern is one of lower highs, lower lows. Even if you went back over that high, won't matter. This arrow now I have to put back up here is a down arrow. The gold-silver ratio, well, you're at 68.46. The recent break low was 68.24. It still favors, as long as you're sloping down, silver over gold, as the silver being stronger. When you look at the silver market, I had told my customers that I thought this was going to be a formidable area into the upper Bollinger Band, and that's exactly what's happening right now in my twice daily reports. And the question is, can the market keep its embedded reading, or is it going to give it up for a bit here and try to return to the 18-day average of closes? In the silver ETF, you're having an outside day, I believe. If we take a look at Friday's 1745 to 1729, we have the higher high. We haven't gotten through the 32, so I'm not right on it yet. If it takes out 1729, you'd have an outside day down there, but you don't have a pattern anyways. You got a lower low and a higher high. You got nothing. You do have an embedded reading. So all of the metals I'm showing you, with the exception of the gold miners, have this embedded reading on the daily charts. That's bullish. If they give them up, look for price in the 18-day average of closes to make a run for each other. The copper market's in a downtrend. Lower highs, lower lows, under the 18-day average, but it's caught in this sideways action. It's spinning. If you're looking for downside follow-through, you're not getting it. If you buy it and you're looking for upside follow-through, you're not getting it either. And the market's knocking on the door of getting under a 30 reading, which would put it oversold. I saw an interesting article in the Platinum over the weekend. I don't know if it was Barron's, but it was one of the biggies. I read the Financial Times, Barron's, the Wall Street Journal, so I get confused as to which one I'm reading. Reuters is thrown into that mix as well, and Bloomberg. I mean, they're all there. So they were talking that this market's too high, the car sales are down in China, and the demand for platinum is going to be very poor. That bare letter, I guess, is what the market needed because it soared to the upside today. We'll find out what it does soon. But even though it soared, look, it's given that whole thing back. It's down $20 from the high. Don't know what to tell you. In the palladium market, you still have a pattern of higher lows, higher highs. Everything is bullish. Supports 774.87. You don't want to take out today's low of 769. That could be problematic. Dollar index, making a late day charge to stay what? Bullish. The problem is in the market, it's overbought. Any reading over 70 I consider overbought. So we've got all the other criteria, but overbought is overbought. You got to figure out what you do with it. Let me give you an idea of how I'd like you to start off your morning. See the cup of coffee? Do you see the chart here? Here's what I do. I write special reports throughout the day or my twice daily reports. Now, twice daily, I put in the day's fundamentals, prepare you for the next hours of trading. Like tonight, I'm going to prepare you for tomorrow morning's trade, what's coming out, what are expectations, blah, blah, all that. Then I'll give you some events that move the market today, and then I wrap it up with extremely specific buy and sell signals that I then in the morning at 8:30, I record 40 charts live. I'm not in the tape. I'm just sitting on my computer. I'm capturing them. I'm giving you all the buy and sell ideas I can think of. They're not just limited to my research. They're what I think's going on, where the pros are doing, why they're doing what they're doing, where they'll sell, where they'll buy. It's my ideas. I back it up, obviously, with the written updates. And in green and red here, you're going to see buy here, sell there, take profit, here's your stop, blah, blah, blah. You get all this. I sometimes do, like today, I'll have, I think, 5 updates out. Normally it's 2. But when there's a lot to be done, that's it. If you'll notice this morning, there was no morning update, an early one. I was too busy. I mean, my job here is to be sending stuff out to my research people. And that's what I do. They want me to come up with ideas for them. I'd like to show you what I'm doing for 20-day free trial. If you decide to buy it, write this down right now. Capital I, capital R, capital A, 20. Go to our website. You'll see Become an Ira Epstein subscriber under Education or Ira's Research. Go in there, click it on, put that on. You're going to get $20 off your first 30 days of your subscription. Now, if you have an account with us, that's going to lower that price by almost 50%. It's only $40 a month for other people. If you don't have an account, it's $60, so it'll be $40. But that's for 30 business, that's 22 business days, 30 days. Not a bad deal. Take a look, but you get the first 20 free if you haven't tried this before. Again, IRA 20, I'm Ira Epstein. You have a great day.